Traders, there is danger in the markets right now. We are getting very, very, very overbought in these markets, and we're very close to probably getting a very big, a nice, good pullback. Maybe not a crash, but a pullback in the markets. I'm going to show you exactly the number one thing you should be looking at to see if we are overbought and are we getting too far away before we actually get some form of a pullback, and why this is probably the worst time to be trying to buy the market as a trader. Let's get straight into it. Don't place a trade based on what you're seeing in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. So I want to teach you this one thing. I was teaching my private clients today something, and I really want to help you when it comes to your trading, because I think this is going to absolutely crush it for you to do really well in the markets, right? So when we're always trading, we're always what? We're always trying to find the best time to be entering the markets, whether it's whether it's a good time right now, whether we're overbought means you don't want to be buying the markets right now, or whether we are oversold means we don't want to be shorting the markets right now, right? So we've got the three scenarios: overbought, no buy, right? Oversold, no sell. In a good time, good buy, good sell, right? So we're looking at that. How we know, all right, we can go through a lot of other things in the markets, but the one thing I'm always looking for is we've been going up in these markets, and we've been doing it now. And the one thing I really want to share with you is what happens. Okay, what happens in these markets is that we can find if we're getting overbought or oversold. I don't use stochastics or RSI or MACD or anything like that, okay? I don't use that. I actually let that particular market tell me what's going on. So how I do that is I use something called the moving averages. You're probably thinking, John, how does a moving average? So right now, I'm looking at a daily chart on the S&P 500, okay? And you're probably thinking, John, how does a moving average help you when it comes to overbought and oversold levels? That doesn't make sense. Here we go. Okay, here we go. So what we're actually looking for is I'm looking for the market. What is the one? Let me ask you a question here. What is the one thing that happens when we get too far away to the upside from the moving average? What happens? It ends up what? Pulls back to it, right? This happens through history, through time. If I go back to as much time as possible the last since 2017, right? You can see that's all what happens. We may get anomalies where we get really overbought and oversold. So I'm looking back here back in 2018 where we got this massive spike here. That's anomaly, right? Nothing through there and nothing through there. So that was sort of an anomaly through there. But even so, we can see we got the maximum distance. We get a sort of a distance away from the moving average before what? Before we get to the overbought signal there, right? Overbought or oversold. So because we're now above the moving average, I want to focus on more of the overbought. So let me show you this here. So let me take this off the screen. So what I'm going to do is I'm going to draw a trend line, and I've done that here already, right? I'm going to draw a trend line, and let me actually go to here. I'm going to use this here. So I'm going to draw a trend line from there. And as you can see, look at that there. That was the maximum distance away from the moving average. That was the maximum distance away from the moving average, and then it pulled back, right? You can see how that was a lot shorter. That was a lot shorter. As you can see, that was a lot shorter. This one here was also a lot shorter, and this one here was also a lot shorter. So you can see this one here was the anomaly. So that's not the average. So we can't use that. So let's actually use this one here, right? So I'm going to use this was the maximum distance away. Now it doesn't pull back straight away, but once we get to this point, look at this here, a little upward move, and then what? We pull back to the 52. Right? So I'm going to create a parallel trend line, the exact distance away from the 52 to the resistance point. And now I'm going to look at that through there, right? Now I'm going to see, okay, so that was actually pretty much dead smack on. We went sideways at that time. It was telling us what? The market is getting overbought, and we need to wait for the moving average to catch up and the market to come down, okay? Pull back, or at least a sideways movement before the moving average catches up. So I'm going to do the exact same thing through here. As you can see, it wasn't exactly, but it was about 80 to 90% before we got there. And then guess what? We pulled back. Let's go to here. Look at that. Pretty much what? Almost 100% of the distance got to there before it pulled back. So you can see here that it shows you that this is the average. This one here, not exactly. This one here, not exactly. You can see the average, right? This one here, not exactly. So you can see that this is the average. And if we know, looking back over time, we know once we get towards what? Once we get towards the top of this range, it can continue up a little bit more. But if we're looking at the scale from, say, 0 is the start of the move and 100 is towards the end of the move, if we're getting towards the end, right, we know once we get to the top here, we're getting towards the 90% range, and we may have a little bit more of a move to hit the 100% before we see some form of a pullback to the moving average. So look where we are right now in the markets. If I bring on my trend line, look where we are right now. Where are we? We're actually at the max. We're actually at that level there. So it's telling us right now, on average, for the last couple of years, the average of the maximum distance away here, again, we may have a little bit more upside because we did back here, right? And if I just draw, even if I draw the anomaly, right, the one that was absolutely just the maximum distance, the absolute maximum one, this was the largest sort of maximum distance away. This was as you can see, this was sort of the biggest one. Even if I use the absolute biggest one from there, you can see that by using the moving average, look where we are right now. Let me zoom in a bit here. Right, look where we are. So over the last 2 years, this here was the absolute maximum point in the last 2 or so years before it became massively oversold, or overbought, should I say, overbought. See that through there? Massively overbought. And this one here was the average. So this one here was, this happened once in the last sort of 20 years, but that was the maximum there. And this one's here happened like 80% of the time. It's telling us once we actually got there, we're getting very close to the overbought scenario before we see some form of a pullback, right? And this one here was like the absolute extreme. So we may even get a little bit more upside, but there's a high probability we're probably going to see some sort of a pullback soon before we start to see this moving average trending up. Make sense? So traders, make sure if you do like this sort of stuff, make sure you head on down to johnsfreegift.com. I'm giving away a free trading course right now. And I've also got some really other cool bonuses there that I'm giving away, where I'm giving away a free coaching call and also a free training on my trading strategy and stuff like that. It's a whole sort of master trader bundle I'm actually giving away. But today's the last day, guys. I'm actually redeveloping the way that I do business, and you'll probably be noticing that on YouTube as well too. I'm going to start doing different things. I'm going to be changing the way that I do business. I'm going to be changing things up. So this is probably the last time you're going to get the free course. Probably a coaching call and some systems and stuff like that. So if you want to get access to it, guys, this is the last time you're probably going to get access to it, because again, I am completely changing the way that I do things when it comes to the way that I actually do business in this realm. So again, guys, first thing in the description, or johnsfreegift.com, and again, it's all free right now. So go do that right now, guys. So we can see that's what's happening there. And to cut a long story short, I did the exact same thing on the Dow Jones, and look where we are, right? This line here on the Dow Jones. So this line here where we are, look at this here. This was the maximum distance away. And once again, if I create the parallel trend line, that was the maximum distance away. Look at this here. It was like 80 to 90%. So once we actually got to the top up there, we're getting too far away. We're getting overbought. This one here was just a little bit more before it actually pulled back. This one here, as you can see, it wasn't exactly a little bit more for the upside. Again, this one here had a little bit more. This one here, pretty much 100%. This one here, pretty much 100%. This one here was the anomaly where it actually had a lot more to the upside. Or not even a lot more to the upside. As you can see, it actually had a little bit more upside before we actually had a pullback. I did that for the Dow Jones, and then also I did the exact same thing for the Nasdaq. You can see what that's actually for the oversold levels, but you can see what I'm looking at. I'm using the extremes here as well too. You can see that on average, these are the maximum distance away on the Nasdaq. Maximum distance away on the Nasdaq here. These ones are much smaller. They're not the bigger ones. And even back through here, as you can see, that was sort of once we got towards the top of this range, we're getting too far away from the moving average. And that's where we're probably going to go flat for a while, or we're going to get the pullback and wait for the moving average time to catch up. If we have a look right now, what we're seeing right now when it comes to the Nasdaq, we actually can see how The Nasdaq is where? The Nasdaq is right, pretty much almost. We may get a little bit more upside from here, but where are we? Where are we when it comes to the distance away? We're too overbought, aren't we? We're getting to if we're from the 0 to 100 level. 0 is where the move starts, and 100 is getting towards that maximum distance away, the overbought level. We're probably at that 95 level there. So we may have a little bit more upside, 95% there, but then we're going to see some form of a pullback. So this is a bit of a warning sign, guys. This is not the right time to be trying to buy the markets.